Welcome to the Deep Dive. Today, we're tackling a fresh analyst report. It's from Systematix Institutional Equities, dated May 22nd, 2025, and it's all about Sun Pharmaceutical Industries, SUNP.
That's right. And the core question seems to be, is Sun Pharma hitting some kind of turning point? Generics facing pressure, specialty drugs getting more focus.
Exactly. That's what we want to figure out today for you.
Yeah, our goal is really to sift through this report, pull out the key insights, understand what it all means for Sun Pharma now, and where they might be heading. Let's get into it.
Okay, so the report immediately flags that Sun Pharma's adjusted earnings for Q4 FY25. Well, they fell short of expectations.
They did. And there were two main culprits, really.
What were they?
First, weakness in their U.S. generics business.
Hmm.
And specifically, the report notes that Grevlimit's contribution was, quote, immaterial this quarter.
Immaterial. Okay, that's interesting. Signals maybe a shift there.
Could be. Maybe focusing on fewer, higher-value generics. Something to watch. And the second factor, a much, much higher effective tax rate.
How high are we talking?
It jumped to 19.8% in Q4 FY25. Compare that to just 5.1% in Q4 the year before.
Wow, okay. That's a significant jump. Is that the new normal then?
Well, according to Sun Pharma's own guidance, pretty much, yes. The rate's expected to stay around this level, maybe even tick up slightly.
Why is that?
It seems like previous tax benefits have run out, basically.
Oh,
So yeah, this higher rate looks like it's here to stay for a while.
okay, good to know. Does the report hint at how they might manage that impact on the bottom line? Any cost adjustments mentioned?
Not explicitly detailed in this section, but it's definitely a factor shaping their financial landscape moving forward.
All right, so that's the recent past. What about looking ahead? Revenue growth projections.
For fiscal 26, they're guiding for mid to high single-digit revenue growth.
Okay, mid to high single digits.
Yeah, but they do add a note of caution.
Yeah.
Global uncertainties, currency swings, U.S. regulatory question marks, those could affect things.
Right, the usual caveats. The report also mentions some pretty significant investments coming up.
Absolutely. $100 million earmarked for launching new specialty products.
$100 million. Which products?
Specifically, Nilagi, Leqelvi, and Cosabelimab. It really shows they're serious about boosting that higher margin specialty side.
Makes sense. So challenges, but also clear strategic bets. Let's maybe zoom in on Q4 financials then, see how it played out.
Good idea.
Before we do that, though, beyond these launches, what else is on the horizon that we should be watching?
Oh, definitely the clinical trial data. There's a lot of anticipation around results for their NCE pipeline drugs.
NCE, novel chemical entities, right?
Exactly. Particularly Vibozolimod and also Ilumya, but for psoriatic arthritis this time.
Yeah.
Positive data here could really boost sentiment about their longer-term growth.
Got it. Definitely key catalysts to watch. Okay, so let's hit those Q4 FY25 highlights. Revenue first, RS $129.5 billion. How does that stack up?
Well, it's up 8.1% compared to the same quarter last year, so year-on-year growth is there.
Yeah.
But it's down 5.2% from the previous quarter, Q3, so a sequential dip.
Okay. And profitability, EBITDA, Pat.
EBITDA came in at RS $37.1 billion. That's actually up a strong 22.4% year-on-year.
Nice jump year on year.
Yeah, but again, down quarter-on-quarter by 7.3%. The margins are pretty healthy, though, 28.7%.
And Kita profit after tax.
That was RS $21.5 billion, and here's where you really see the impact, down 19% year-on-year and down 26% quarter-on-quarter.
Ooh, that tax rate really bit, didn't it?
Seems like it. The PPA margin landed at 16.6%.
Understood. And R&D spending in the quarter.
They invested RS $8.16 billion. Interestingly, that's actually down 9.3% compared to Q4 last year.
Okay. Let's break down the revenue by segment then. How did India-branded generics do?
Very strong. RS $42.1 billion in sales. That's up 13.6% year-on-year. Slight dip, 2% quarter-on-quarter, but still robust domestic performance.
Good. And the crucial U.S. formulations business?
That came in at RS $40.2 billion, so only up 1.7% year-on-year, and basically flat compared to Q3.
Well, it's flat.
Yeah, but the report points out that strengths in their specialty products in the U.S. helped offset the decline in generics there.
Ah, so that specialty focus is already helping cushion things in the U.S.
Exactly. Seems like it. The generic side is facing more competition, so the specialty growth is key. Makes sense.
What about other international markets, emerging markets?
The emerging markets did well year-on-year. RS $22.5 billion, up 10.9%, but down 3.5% sequentially.
Okay. And Western Europe and other markets?
RS $17.3 billion, up 6.4% year-on-year, but quite a drop, 20.6% compared to Q3.
Significant quarterly drop there. And bulk drugs.
Both drugs and others, RS 5.9 billion, strong growth year-on-year, up 21.5%, but again, a small dip, 3.1% quarter-on-quarter.
So a bit of a mixed bag internationally quarter-on-quarter, but mostly positive year-on-year growth.
Generally, yes. Different dynamics in different regions, as you'd expect.
The report also mentioned insights from their earnings call. Anything jump out?
Yeah, a few things. First, their cash position is really strong. Net cash of USD 3.2 billion. That gives them a lot of flexibility.
3.2 billion. Wow. Okay.
And they reiterated the U.S. story. Strong growth in specialty products, Ilumya, Sequa, Winlevi, Odomzo were mentioned, offsetting that generic pressure.
Right. Consistent theme there. What about India performance discussed on the call?
They emphasized their #1 ranking in India, 8.5% market share, according to AIOCD AOCS data for March 25 MAT.
Still number one.
Yep. And they launched 14 new products in India during the quarter. Plus, they apparently outperformed the overall Indian market growth across their major therapy areas, so really strong domestically.
Impressive. Any highlights from emerging markets on the call?
Branded formulation revenue there was USD 261 million, up 6.3% year-on-year. They specifically called out good performance in Romania, Russia, and Brazil based on local currency growth.
Okay. Was there any talk about costs, material costs, for instance?
Yes, material costs were 20.7% of sales. That's lower year-on-year.
And why is that?
They attributed it to selling more specialty products, which have better margins, and just a better product mix overall. So that's a positive sign for profitability.
Good point. And R&D spending, any more detail from the call?
Well, the quarterly spend was 6.3% of sales. That's the RS 8.1 billion figure. But interestingly, 36% of that R&D spend was specifically on specialty R&D.
36%. Wow, that really underlines the focus.
It does. And looking ahead, they guided for FY26 R&D spend to be between 6 and 8% of sales.
Okay. So bringing it back to the analyst view Systematix, you said they have a buy rating.
Yes, a BUY rating with a price target of Rs 2,206.
And the logic for that target?
It's based on 35 times their estimated earnings per share, or EPS, for FY27.
35 times FY27.
Right. And they mentioned they tweaked their estimates slightly, factoring that updated tax guidance and the expected contribution from those new specialty launches we talked about.
So despite the Q4 miss, the longer-term view from this analyst is still positive.
Seems that way, yes.
The report likely included forecasts for the next few years, right? Any highlights there?
It did. For FY25 through FY27, they're projecting, sales growth, improving gross margins, growth in EBITDA and EBITDA margin.
Profitability improving.
Yeah, and also growth in PANT and EPS. They also expect dividends per share, the DPS, to increase over that period too. So positive trends across the board in the forecast.
Sounds like a positive outlook. What about valuation metrics they might be looking at?
Well, the projected PE ratios for FY25, 26, 27 show a downward trend, which suggests, if the earnings come through, the stock might look relatively cheaper over time.
Okay.
Same story for the EBITDA ratios, also projected to trend down.
Got it. Any other key financial points from the projections? Per share stuff, returns?
Yeah, they see growth in EPS naturally, but also cash EPS and book value per share. Return ratios like ROCE and ROE are expected to stay healthy.
And the balance sheet? Debt.
Still looking strong. That net debt to equity ratio is expected to remain comfortably negative, reinforcing that strong net cash position.
Okay, so the forecasts paint a picture of steady improvement. Now, finally, how did the actual Q4 results compare to what Systematix and the wider market, the consensus, were actually expecting?
Right, the actual versus estimates. For net sales, the actual number was a little below both Systematix and consensus by about 2-3%.
Okay, slight miss on the top line.
For EBITDA, it was also slightly below the Systematix estimate by about 3.8%, but actually slightly above the consensus estimate by 1.8%.
Yeah.
So a mixed picture there.
Interesting.
But the big miss, as we suspected, was P2T. Profit after tax was significantly below both estimates, down almost 30% versus Systematix's number and down 23% versus consensus.
Wow. That really highlights the tax impact, doesn't it?
Absolutely. It seems that higher than expected tax rate was the main driver of the earnings miss relative to forecasts.
Right. Okay, so let's wrap this up. If we boil down this whole deep dive into the Systematix report on Sun Pharma, what are the main takeaways for you?
Well, I think it's a story of contrasts, really. You've got this really strong domestic business in India, branded generics doing well, and you've got a promising growing specialty business, particularly in the U.S. But yeah, challenges remain. The U.S. generics market is tough, competitive, and that higher tax rate is definitely a headwind for near-term profitability.
So looking forward,
Looking forward, all eyes are really on that NCE pipeline data,
Mm.
the clinical trial results, and how well those new specialty product launches perform. Those seem crucial for driving that medium to long-term growth story.
That makes sense. So, a final thought for you, the listener. Think about how Sun Pharma balances the strength at home in India with the complexities, the competition abroad, and how critical is the success of that specialty pipeline, those new drugs, to their future.
Yeah.
What are the signs, the metrics you would watch to see how they're navigating this path in the coming years?
Good questions to ponder.
Definitely. Thanks for tuning in to this deep dive.